Hi guys, the engineer here. Today I will introduce you the regular trading hours gap tool, the Dynamic Regular Trading Hours Gap tool, a collaboration developed with Toodegrees. This tool will help you to have in your chart the regular trading hours gap. This is an automatic framework and a system for the reprice or redelivery of these gaps, these inefficiencies. Okay, what is regular trading hours gap? Well, this concept was introduced by the Inner Circle Trader on 2023 mentorship. And basically, when the market closes at regular trading hours and the market opens at 9:30, the New York Stock Exchange are only available to trade between these two time windows, the 9:30 opening to 4 p.m. close. So everything outside of this time window is not printed in on the New York Stock Exchange. So price will create a gap, an efficiency between these two time levels. So when we are trading at the 9:30 opening, we should consider this gap in our trading. Why? Because imagine that price closed here at 100 and gaps and 150 points. So every point that price moves above this price level at 9:30, you are trading in premium relative to the previous day close. What does it mean? That if you are expecting higher prices, you want discount or at least a fair value price before engage and have an opportunity to position yourself in a good price level. Okay, so with this gap, we already know which price level is discount for us. If you are bullish, like on this diagram I have here, and you want to see price drop into discount of this gap. Ideally, we want to see price at least the 50% of this gap being rebalanced, and then price should expand. You want to see smart money reversal here and S&T with other asset, and combine the power of three of the 10 a.m. candle or the 11 candle, but you should consider the power of three of 1 hourly candle at least to before engage price. So inside the macro is ideally your time window to execute. Okay, so this is a basic model, very powerful. This is my A plus setup here. So you want to see price drop and then reverse to continue into your high time frame order flow, institutional order flow here. You are looking for higher prices on the weekly or daily chart here. So this is a basic. You want to see sometimes when the price is not that big, like on this example, you want to see price close the gap, and below this gap you want to see the smart money reversal using the standard deviation projection of this gap that the tool is automatically loading in your chart. Okay, so this is example here, the framework, and let's see one example of today. This is Monday. This green line here is midnight. I use always this level as implied discount for my daily candle expansion and the regular trading hours cap to look for discount and premium levels. So if I'm expecting higher prices, look the size of the gap. Today we gap only 11.5 points here. So the gap was not that big like the example before. So you want to see price engage a sell side liquidity pool below this gap, like here. We have this liquidity from the London low, and we take this low and we use these sell stops here to pair the orders of smart money, and now we are looking for the smart money reversal during the formation of the 10 a.m. power of three candles. And you see how we are respecting the standard deviation projections of this gap right here. Inside the macro, we have this order block, propulsion block paired with this inversion fair value gap. Price, the 10 a.m. candle opens, move higher, take this buy side here, but we have resting this liquidity pool above the marketplace. So we retrace, reaccumulate more position here, the first reaccumulation of this smart money reversal of this market maker buy model, sorry, and then price just move higher. Very, very aggressive move today. But yes, this is the framework of how you use these gaps. Okay, so on this table here, we have the color coding. We know how we gap every day. A negative gap on Monday and Tuesday, previous week. Positive gap Wednesday, Thursday. Negative gap on Friday, and today was a positive gap. Between Friday and Monday, we gap a little bit higher. And we have what percentage of the gap has been rebalanced. And we know, for example, that on previous week, the Wednesday and Thursday, we have a percentage of the gap that remains open. Here, this portion of the gap is still open. Okay, so this is a beautiful example of today's price action. And let's see another example using the same profile on previous week. Every week we have this model. Two or many are sometimes as 3 times per week, but I have different models to engage price in different ways every day. So we have again the same model here. Price gaps lower relative to the previous day close. So we are in discount relative to the previous day close. Price move lower, use this gap, previous relevant trading hours gap here, as a balanced price range. And let's put here to see the standard deviation of that day. And look, I actually took this trade. And price move lower, take the sell side liquidity, this sell side liquidity right here. And below the sell side liquidity, we have this stop rate. And now we have this breaker. Look the time window. We are inside the macro. And now the 10 a.m. candle opens, reprice this breaker here and start to move higher. And we can use the standard deviation projection for partial taking or to anticipate where price can just protract or retrace or reverse completely. Okay, so let's see what do we have here. We have gap fill alerts. When you have the gap fully closed, you can have alerts. You can use these for looking for SMTs on ES and Dow Jones. When you can anticipate when the gap has been fully closed, which day of the week you want to see in the chart and the table, the percentage of the size of the gap and the percentage of the gap. And you can change the color of the gap and as you want, show projections of the gaps. You can use this as threshold to avoid, for example, having the standard deviation projection or on a very small gap to keep your layout clean. I like my charts clean. I don't like to have a lot of uh, lines in my chart. Okay, so you can use this, for example, if you want to see the previous gaps levels, the 50% and the quarters of the gap. See, and you can customize this tool as you want. So this is a basic introduction of how I use this regular trading hours gap. I will keep posting videos on different models and how you can use every day. Uh, I hope you find this insightful and have a good trading. Stay